What's up, traders? Welcome to 7minutestocks.com, utilizing technical analysis to suggest direction based on human emotion. Today is May 8th, 2012. This analysis is for entertainment purposes only. I do not and or will not make any recommendations to buy or sell anything. This is just simply my opinion. All right, we have a lot to cover. Let's get started. All right, the first thing we need to look at is the S&P 500. Yesterday, we saw it break down from this rising wedge. We broke down from these two moving averages. We broke down again, confirming below this candle here, and then now we bounce off and we close right above this support line here. So what does this look like to me? This actually looks very bearish to me, to be honest. What we need now is this pattern here to start forming a consolidation pattern before we head lower. Okay, we need to consolidate first before we head lower. The problem we have here, though, because it's mixed signals, okay, I mean, when I say bearish, I mean the possibility of this looking a lot more bearish than it is bullish. However, we do have this hammer style candle here that indicates a possible reversal. All right. However, and to validate that, we need to look at the SPY, which is the ETF that tracks the S&P 500. And sure enough, we do have this hammer style candle, and we do have it on very nice volume there, which is a good indication that we may reverse. Now, here's the thing: we have this trend line here. This morning, it broke down through the trend line, came all the way back up, and closed right above it. You see how they were able to save that? Okay. Now, there's a couple of ways of drawing this trend line. The first way of drawing this trend line is like so, where we barely would be able to close above, and the second way of the drawing the trend line is like this, where we actually are above this symmetrical triangle. I'm going to be more of a in the camp that we are still in this symmetrical triangle. We have this hammer candle here and on nice volume. This is an indication to me that we may actually get a small bounce, either a small bounce or we go sideways. But we'll see tomorrow what happens. Right now, the E-mini futures took a dump earlier today. Was down as much as $6. Now it's made a recovery. It's only down about $2.50. Now, just because I'm saying that we may get a small bounce tomorrow because of the indicators pointing that way, doesn't mean that it absolutely will. Okay, so if you are short, then please put your stops in. Okay, just to be sure. And if you're long and you're in the money, please put in your break even stops just in case the S&P 500 continues in a downward motion. All right, just gonna do a quick follow-up on AXP, and then AXP will be done. We had our MCL up here, which indicated a possible reversal. We got that reversal. Today we came all the way down here, almost coming down to the 20 moving average. I had already sold half my position, and I put a break-even stop on the second half. I was actually short on AXP. And then towards the end of the day, the stock recovered, creating this doji candle, and then I got stopped out for a break even on my second half. So I'm still in the camp that we may actually touch this MCL over here. Maybe with some consolidation first before we break down. But you know what? You don't want to take any risks in this volatile market. If you're profiting now, either put a break-even stop or sell half, and then put the second half in the break-even stop. Okay. Okay, and the next thing I want to talk about is the GOD. The GOD is what we talked about yesterday. Yesterday, I talked about the GOD having a possible bearish pattern here, and that bearish pattern was indicated by, let me delete this drawing here, this down movement here. We're under this this trend line here, which could have been drawn two different ways. We were either under it or over it, but regardless, we had this bearish pattern. I did say we needed to kind of just consolidate a little bit more before we expect the downside. I did not expect it to come down this soon, which was today, and I also did not expect it to be this much. But the expectation of a bearish pattern, which was we have a down move, some consolidation here, and then now we have another down move. I do have an MCL, which is a mathematical calculated level, all the way down here. I'm not sure if it even gets there, but the calculation, I just input the numbers, and that's what it spits out. So that's what I'm expecting. Now we did get a little bit of an intraday bounce on gold. If you look at the hourly on gold, we had this hammer candle, and we also had it on pretty good volume. However, the volume wasn't more than the last three volume bars. I like to see the volume on the reversal candle being higher than at least the last three. But in any case, we did got that reversal during intraday for the GOD. So I was actually short on GOD here. GOD came down. Didn't think it was gonna come down this soon, but it did. So I actually just took my profits and then just took it off the table because I wasn't sure what GOD is gonna do in the following days. And because I'm playing with options, options expire. Time is definitely against me. So the longer I wait, the less the option is worth. If this guy creates a consolidation pattern, to prepare for another down move, then I'll probably reshort gold at that time. All right, now we have ABX, and this is probably the last thing I'm going to do on ABX. ABX is pretty much follows gold for the most part. Gold was down today. GLD, which was the ETF for gold, went down today, and so did ABX. ABX held this level here. This MCL, this mathematical calculated level, actually held for 3 days, which was pretty good, and then it just took a dive on ABX. And the same thing with ABX, we had this down move, consolidation, and another down move. And the same thing, I was expecting a little bit more consolidation before we came down, but the down movement actually happened today, and it actually happened actually a lot faster than I expected. Okay. I want to quickly talk about Caterpillar, which is CAT. I had this MCL over here. I actually took the trade at this purple line here, and then towards the end of the day, Caterpillar made a recovery, and it closed right above this MCL here, which is a mathematical calculation. It's about 6 cents off or 4 cents off, something like that. This line, this support level did hold. Now it did create a very nice hammer candle, and I really like the fact that it was on high volume. It was on higher volume than the past 1, 2, 3, 4, 5, 6, 7, 8 days. So this and it's right into a gap fill. However, if you notice, the gap fill is this top line here. So is the 200 moving average, and it was not able to close above. I was hoping for Caterpillar to at least close above the 200 moving average. Unfortunately, it wasn't able to do that. So it's kind of like a 50-50 right now, right? But I'm already in this trade. I'm already in the money. This much here. And so I have a break-even stop. So right now I'm playing with the house's money. If Caterpillar goes up tomorrow, great. I'm actually long Caterpillar. If it goes down, then I get stopped out with a break-even. No big deal. Okay. Now, for the most part, all day today we had a large sell-off towards the end of the day, and then we had a recovery as the markets recovered. Most 90% of the stocks also recovered. So with that, we create a lot of these hammer style candles on higher volume, because today the SPY is trading at I believe 213 million trades, which, like I said, low volume. We have a flat to upside bias with higher volume. It's harder for the institutions to prop the market up, so we have more of a sell-off, which is what we saw today. But you're going to notice that these stocks are not something that you probably want to trade, because like CMG, for example, we have these 2 moving averages right here. So if we do get an upside, I doubt it's going to be very much. And we have the same thing for IBM. We have these 2 moving averages right there. So even if we reverse up, we're going to still have a lot of resistance. Not saying it can't break through. I'm not saying that. All I'm saying is that there's resistance here. And so, I would rather just stay in cash at this point. For Intel, we have the same thing. We have these 2 moving averages right here, but we did create this hammer style candle on nice volume. Okay, but you see how it kind of contradicts itself. And last but not least, International Paper. I mean, there's tons of stocks out there that have the same type of candle pattern, which is, this is actually a doji on higher volume, but you see the 20 moving averages right there. So it kind of contradicts itself. You kind of want to just be careful if you're long or you're going to plan to go long. Right now, we are in a confirmed downtrend, so you're going to be doing a counter trend trade if you decide to go long. So if you're going long, you want to take profits fast and get out, and then actually short the market or the stock, on any pullback. All right, that is your 7-minute stocks update. You have a nice day. I'll see you in the next